The University of Calgary, located in the heart of southern Alberta, both acknowledges and pays tribute to the traditional territories of the peoples of Treaty 7, which include the Blackfoot Confederacy, comprised of the Siksika, the Piikani, and the Kainai First Nations, the Tsuut'ina First Nation, and the Stoney Nakoda, including Chiniki, Bearspaw, and Goodstoney First Nations. The city of Calgary is also home to the Métis Nation of Alberta, Region 3.
Good morning to everybody from Manitoba West. Good afternoon to everyone that's participating from Ontario, Quebec, and to the east. And welcome to what we believe is going to be a very interesting webinar from one of the leading business executives and thought leaders in finance and regulation in Canada. And we will be speaking today about a paper that has just been released by the School of Public Policy this morning. My name is Dan Wilson, and I have the pleasure of serving as the director of the Financial Markets Regulation Program at the School of Public Policy in the University of Calgary. In the Financial Markets Regulation Program, we have partnered with the Government of Alberta, Department of Treasury and Finance in a multi-year collaboration focused specifically on executing research that is leading edge and identifies ways to grow the financial sector in Alberta. Joining us today is Dr. Jack Mintz, the founder of the School of Public Policy and the President's Fellow at University of Calgary, and Pierre Lortie. If I were to describe the entirety of Mr. Lortie's career, it would take up the entirety of our allocated time today. So I will just give a highlight. Pierre is currently a senior business advisor at Dentons Canada and also a director of ECN Capital Corp. ECN's a TSX listed financial intermediary company that originates corporate paper with most of its operations in the US. Pierre has a very illustrious history. He's previously served as a governor of the Council of Canadian Academies and president of the Canadian Academy of Engineering and a member of the Asia Pacific Foundation Task Force. Business-wise, Pierre famously has held a number of very senior executive positions through the Bombardier Group up until 2003, serving as both president and chief operating officer of a number of the key entities in the Bombardier Consortium. Pierre also served as president and CEO of the Montreal Stock Exchange, and he's received a number of recognitions and held several government appointments, including as chair of Canada's Royal Commission on Electoral Reform and Party Financing. He's also the Prime Minister's representative on the APEC Business Advisory Council. Pierre, from an education background, received an MBA from the University of Chicago, a degree in applied economics from the University Leuven in Belgium, and a bachelor's degree in engineering physics from Laval. He's been awarded a doctorate degree from Bishop's University. He's currently a fellow of the Canadian Academy of Engineering and is also a senior fellow of the C.D. Howe Institute. And finally, Pierre was awarded the Order of Canada in 2001. So as you can see, it is our distinct pleasure to welcome Pierre today. I will serve as the moderator of the discussion today. Jack Mintz will serve as the discussant of the paper. We would ask that if you have questions, and I'm sure you will have questions as they arise, that you communicate them to us through the Q&A box on your screen. And at the end of Pierre's presentation, we will take the time to go through Q&A after Jack has finished discussing the paper. Pierre, I now turn it over to you and wish on behalf of the School of Public Policy and the province of Alberta to thank you for your excellent paper and for the time you've taken in investing in transferring this knowledge and putting it out in the public domain. Over to you, Pierre.
Thank you, Daniel. The paper is aims to give an account of the evolution of the Quebec financial regulations since the early 60s until till now. And one of the major emphases is how Quebec has responded in many ways to the changes that happened that occurred in the financial sector, mainly because of changes in the rules and so on at the federal level. The interesting point is that the Quebec approach has been relatively consistent across decades, independent of which government was in force. And that stems to a large extent because there is a high degree of, there's a widely held belief, in essence, that a high degree of Quebec ownership of financial institutions is intrinsically desirable. And therefore, we see a lot of policies that had to do to ensure that Quebec-based institutions were not put at a disadvantage vis-a-vis federally regulated institutions. The second widely held belief is that effective regulatory regulation of the financial sector is essential for economic growth and so on, but is also, from a political point of view, the best mean to prevent the federal government from encroaching on the Quebec jurisdiction vis-a-vis financial institutions and so on. It remains, however, and we need to say that entrepreneurship and innovation are the driving forces behind the growth of local financial institutions and not regulations. Regulations are very important for the rules and so on and so forth. But at the end of the day, it is the entrepreneurs and leaders of the institutions that make the difference and make things happen. The review of the policies shows a number of things. The first one is that, to a large extent, the structural measures that were adopted and so on came from private legislation that was basically initiated at the demand of the leaders of the financial institutions. And that private legislation allowed not only to have well-designed regulations or rules for particular institutions, given the objectives or their challenges, but at the same time, make things happen much more rapidly than they would be otherwise. And we see that in the old process of demutualization of the insurance companies, where the larger groups were demutualized much earlier, in essence, than the federal insurance companies. At the federal level, it started in 1991, and basically the larger insurance companies, the conversion option was allowed only in 1999. So the changes have happened at the federal level, but at the provincial level, they had come much earlier and allowed, in essence, insurance companies, life insurance companies, to expand quite significantly. It was also used to facilitate mergers between financial life insurance companies. And we see that with the Laurentian Group and Desjardins and the Capital and with SSQ and so on, with the result that today the insurance company, Quebec-based insurance companies have grown quite significantly in terms of their ranking in the Canadian environment. Basically, the other point was that, for instance, with respect to Desjardins, in 1979, a private bill was adopted to allow Desjardins to establish, in essence, a banking or a funding vehicle, the Caisse Centrale Desjardins, which would basically serve to give access to Desjardins to financial markets on direct financial markets. At the AMF side, well, what I've just explained is basically all private legislations and so on. The AMF was somewhat useful in 1990 when it diverged from the OSFI rules for that governed when you had a PNC insurance company and a life insurance company merging. The capital rules were more favorable in a sense, which explains today that all the life insurance companies based in Quebec do both the PNC and the life, and that has allowed them to expand quite significantly. The old drive here was to, in essence, allow the institutions to diversify. That was true in particular for Desjardins. It now become a very large and diversified conglomerate. As you can see, the other income, the part of our income that generated by Desjardins is significantly higher than the largest credit unions in Canada, and even larger than what Canadian banks have. So we see on the chart here that Desjardins is the third largest insurance company today in Canada. Industrial Alliance is number 6, and Beneva, which just merged not very long ago, is number 9. So there's been growth significantly. The other very interesting point which I make in the paper is that all of those insurance companies are based in Quebec City, not in Montreal. And part of the reason for that, I think, is because the University of Laval developed an actuarial program very early in the process and trained a lot of actuaries, in which basically either started the firms or joined firms and basically grew them and took leadership positions, not only in Quebec, but basically outside of Quebec and Ontario and so on. The issue about the Quebec experience cannot has to take into account that in the 1976, in essence, the election of the Parti Québécois, the legislation on language and so on and so forth, and in particular, the rise of tax rates, high income earners and so on to punitive levels, in essence, meant that you had a significant gutting of the financial institution in Quebec. A lot of the head offices just moved out, take it from the banks. Some did it more intelligently than others. Sun Life created a lot of flack for moving out of Montreal and so on and so forth. So that process or that event had a major impact on the mood and so on in the business community, and was not without large impact, economic impact. One of the instruments used by the Quebec government at the time to try to reverse that to some extent was the adoption of the QSSP, which was in the Quebec Stock Savings Plan, which basically was giving a tax credit to Quebec Quebec citizens that were investing in new shares of companies. The program basically was well accepted and turned out to be significant in the amount of capital that was raised by Quebec-based firms. And the other program that was put in place was the labor sponsored venture capital firms. And here, if we look at the can go to slide 7. Yeah, that one. Basically, in most other provinces, the program was not successful, and basically was discontinued by the provincial governments that had implemented. But in Quebec, the Fonds Solidarité and the Fonds d'Action are still there, still driving, and are a very significant source of private equity, private capital to Quebec-based firms. And that we can see that when we look at the number and value of PE deals, that's page 8, where Quebec has a very significant amount of a number of private equity deals and quite a bit of capital there, so that those instruments have those bodies have made quite a difference in the availability of private equity in the province. There's some arguments that there's competition between them and private equity firms and so on and so forth. But in practice, it is marginal. The QSSP and the Fonds Solidarité in particular will associate with a lot of the private equity firms or even government in investing in firms across the province. So to come back to the regulation, in 2002, Quebec adopted the that's page 9, please. Adopted the unified agency model of financial regulation. And basically in doing that, they were more or less copying what had been implemented in the UK with the FSA and in Germany with BaFin. And basically the mandate was given to promote the development of financial sector, facilitate innovative management and commercial practices, and promote the availability of high quality priced financial products and services. The main arguments, because that was a question, is why the unified model. The major point is that it allows for an holistic view of the risk and the assets and so on in a large organization, a large conglomerate. And the point is that complexity has externality type properties that are very difficult to identify unless you have the full picture. It also allows for the promotion of competitive neutrality between different type of institutions. It gives some flexibility in the regulations. And also the other point is that the Canadian provinces, from a financial point of view, they're relatively small, and having a integrated agency allows for first economies of scale, but makes it easier to, or should make it easier to recruit or to retain people that are highly qualified as opposed to small outfits. So overall, that has been working. The main impact is that it provided the National Assembly and government more confidence that they could basically encourage the emergence of financial conglomerates in the province, based in the province. And the assessment of the quality of regulations by the AMF has been from the international organization has been quite positive per se. So in a sense, the AMF has been I think is cognizant of the fact that they need to perform to do their job right, and that the impact or the consequences of failures and so on and so forth would have ramifications that are more than only financial. In the end, the question is that all we're on page 11 is basically to a large extent, the financial sector is basically demand driven. If you have growth in population and so on, you'll have more requests for more demand for financial services. So the question is, if you want to grow it, how do you have a financial sector that's not only demand driven, but is also supply driven in the sense that can provide new products and export and so on and so forth. And the major centers, be it London, New York, and so on, they are what they are, not because of New York, they are what they are because they're exporting their services and expertise worldwide. So that is the question. When we look at the numbers over time, the share of Canadian employment in finance and insurance industry is about 2% of employment, just about on average. So if we look at those ratios for Canadian provinces and so on, basically we see that Quebec seems to be or have a, if you want, a supply side to it, financial services that over and above the demand side, and that because of that, it's creating quite a few jobs that would not exist otherwise. And if you're looking at the number, if the ratio in Alberta was the same as the one in Quebec, you would have about 15,000 more jobs in the financial sector than there is today. So that's about where I am in terms of a summary, if you wanted the paper, but I'll be pleased to try to answer questions the best I can.
All right, thank you, Pierre, for that summary. We will now turn the floor over to Jack Mintz for his thoughts.
Thank you very much. And thank you very much, Pierre, for really an excellent paper. You know, when we started the financial markets program at the school, but also the partnership with the Alberta Finance, it really came out of the pandemic thinking that Alberta was actually the first province to really put together a recovery plan after the pandemic, and emphasized the need for trying to really try to get a number of sectors going in the economy that could allow for economic growth, but also diversification of the province. And one of the key sectors that was viewed as potentially a strong sector for Alberta for future development is the financial sector. And that is where there's been some significant focus right now in government policy to try to make those kinds of policy changes that could encourage the financial sector. And I agree with you very much on your statement that often we think of the financial sector really following other sectors in terms of growth. But there are some examples in the world where financial sector became perhaps a replacement for other sectors that were falling away. For example, in Hong Kong and Singapore, manufacturing became far less important as it moved into China. but the two decided to try to be major regional centers for both headquarters of companies and financial intermediation that would service the regions that they were operating in. And so the financial sector really ended up being a growth center for the two countries. And of course, we've seen in UK, for example, another example where the financial sector has become a very dominant sector for growth in the United Kingdom. And of course, one of the big concerns with Brexit was that the financial sector might be particularly hurt given its role in Europe at that time. And of course, we'll have to see how that develops as things move along. I think Quebec is a great story, and I'm not going to repeat all the things that you've laid out in terms of how the financial sector has grown and the kind of regulatory and tax changes that did that. I have a few questions that perhaps you might want to think about or give some answers to. One point which I think is underlying your discussion is the split constitutional powers between federal and provincial governments in the financial sector. Banking was given to the federal government initially under the 1867 British North America Act. And of course, the federal government has a very significant role when it comes to financial regulation that's done through the Department of Finance, OFSI particularly, as well as the role of monetary policy at the federal level. But the provinces were given the role over property rights and contracts, etc. And many of the institutions that developed at the provincial level were things like loan companies and insurance companies, etc., which gave the provinces a very significant role. And you've alluded to that, but it's just been, I thought it'd be interesting to hear your view whether to what extent does federal powers make it more difficult for provinces to develop their financial sectors. Obviously, Quebec has been able to move around that in many positive ways. And of course, the story of Desjardins is particularly interesting. But it would be interesting to hear your views a little bit more about the importance of banking power, particularly given to the federal government, and what impact that has on provincial developments. Another area that I think I'd be interested in hearing from you is the role of the case, which has been very important in funding particular companies and things like that, and to what extent that is added to the financial sector. That's particularly a hot topic in Alberta because we are talking about potentially an Alberta pension plan that could operate on the same basis as a Quebec pension plan. And of course, that raises some interesting questions as well for financial intermediation. And the third issue on Quebec, be interested in hearing from you. And I've heard this a lot from people in Toronto, at the Toronto, at various Toronto institutions and the Toronto Financial Services Alliance. Human capital is really important, in terms of having expertise and how Quebec was able to develop the human capital. Was that just simply there to develop, or were there things that were done specifically to develop human capital that would be needed to run good financial institutions that are certainly available in Quebec? Those things I think are interesting questions to talk about. In terms of Alberta and its ability to grow the community financial sector, it already has some strength. And with ATV, it has a very strong credit union movement. There's Canadian Western Bank, which is a bank that is one of the prominent banks in Canada that also has a unique role. So we have a number of things that that could be useful for developing the financial sector. I don't know if we have the kind of strength in the insurance sector that was in Quebec. However, in the past, we have a very entrepreneurial economy, and that has driven a lot of need for financing. And of course, Alberta was one of the first to develop junior capital pools and even had its own Alberta Stock Exchange at one time. So one of the interesting questions of whether some of these institutions should be returned or not. Alberta recently has developed captive insurance, and I had an intriguing conversation with somebody in Toronto. Alberta now actually has the most attractive capital insurance legislation now, both on the regulatory side and also even on the tax side, with its 8% corporate income tax rate, is very attractive for insuring Canadian risks in Alberta. And as a result, there's a number of captive insurance companies that are looking to setting up now in Alberta since the legislation was passed only recently. And I think also, I think your comment about regulation, I think, is something that's very important to think about here. Canada's regulations have been based on the 4 pillars for a very long time. I worked many years ago, and just when I first started off, for the Economic Council of Canada, the now defunct Economic Council of Canada. I had a huge report on banking back in the 1970s. And at that time, talked about the 4 pillars and the need to break down some of the barriers between the 4 pillars. And I guess one of the questions is to what extent Quebec's regulatory system is helping breaking down those pillars. When I read your paper, the feeling I got was that it is one of the things that has been useful, I think, in perhaps breaking down some of the barriers to entry in various sectors, and having a more homogeneous approach to regulation, which I think is quite interesting. And I guess the only other point, as you know, I'm not a fan of investor tax credits, but I like the Quebec Stock Savings Plan, but there's been a number of those done across the country, New Brunswick, British Columbia. Alberta played around with it for a while. As you pointed out, the labor stock venture corporation credits have not done very well in a province like Alberta. May have succeeded better in Quebec. Although we actually published a paper by Jeff McIntosh and Doug Cummings that was pretty critical of the Quebec experience as well. But generally, a lot of the studies have shown that investors tend to get significant tax benefits with investor tax credits, flow-through shares, especially combined with RSP deductions. And as a result, they end up not spending a lot of time looking at the economic returns. And so a lot of the studies have shown that the economic returns have been quite poor on a lot of these investor tax credit type arrangements. And so therefore, there's been significant criticism, including my own, that actually they don't necessarily lead to good economic returns because of too many bad projects getting funded as a result. But outside of that, one issue, I think the experience that Quebec has had, I think it's just been tremendous. And I think it's very important for not just Alberta to look carefully at your paper and to think about what it can do to grow the financial sector. But I think other provinces should be having a good look at the Quebec experience. And it's really wonderful to have this paper of yours to add to the rich number of papers we have at the School of Public Policy, including 2 earlier ones that you've done for the school that have been just terrific papers, one on National Security Regulator and a later one on growing firms. One of the things Pierre has been very effective at has been talking about the need of developing policies that can get companies to grow from small to larger sized, to medium-sized companies at least, and which has been a real problem here in Canada. A dearth of that has been happening for quite some time. So I think there's a lot of work to do, and I want to thank you, Pierre, for really an outstanding paper.
Thank you, Jack. Pierre, I wrote my notes from that. I have 5 different questions that Jack has thrown over. I would ask the audience that if you have any questions that are formulating in your mind, that you begin to put those into the Q&A box while Pierre responds to the questions from Jack. But Pierre, I'm not sure if you take notes, but I've written them down. And the first question was, the issues of the challenges of the division of powers and how Quebec has been able to operate at a subnational level to grow its financial sector, notwithstanding the federal banking powers and currency powers.
Well, these are very important questions and so on, and I'm at the view that the federal government has clear responsibility about the stability of the financial sector in Canada. And contrary to some of the comments by the province, the Bank of Canada having some jurisdiction and oversight on clearinghouses and so on, I think that's the right thing to do. And the Fed should be at that level also. The main, when we look at the history of the reports in Quebec and so on, the main concern was not the powers of the Feds, but was basically that Quebec-based institutions should not be disadvantaged compared to the federal institutions. So that brought basically to have the contingency plans for bankruptcies and so on and so forth, so that investors will have the same level of protection in a Quebec-based institution than a federal institution. As a matter of fact, recent legislations even made it much more easy to follow the Feds as they were changing or they will change the rules on that protection. So the main point was really, let's make sure that the protection that's given to the savers or whatever is the same that they would have in a federal institution, say. So that to a large extent, that is where it stood for a long time. But the other point is that increasingly today, with the institutions become larger, and with international rules coming into play in terms of regulations, be it UNESCO and so on and so forth, IMF, there is a significant convergence of the rules that apply and the regulations that apply. And quite frankly, if you don't follow them as a province, sooner or later you're going to have problems with your financial institutions, or people will shy away from investing in them because the risk will be considered larger. So there is here a convergence that sometimes may be annoying, but overall fulfills a very important role. And having the Feds there, OSFI there, and so on and so forth is not the end of the day. Okay, so there's a lot of room to do it and do it intelligently, and doing it, when the rules make sense, that you go with them so that you don't create differences just for the sake of creating differences or whatever. And I think to a large extent, that's what the AMF has done, or Quebec has done, vis-a-vis its institution. That does not preclude having some imagination in some areas. For instance, the Quebec rules, Quebec capital rules for a PNC insurance company being acquired by a life insurance company, or basically make it very difficult in the rest of Canada because cost of capital is important. To the extent that that was corrected in Quebec, what do you see? You see all the life insurance companies in Quebec now having PNC operations per se, and the integrated regulatory framework makes that more easy to A, accept, and B, to police going forward per se. So the Fed's rules don't prevent some of those things from happening, which have had a significant impact on those financial institutions. And the other point is that vis-a-vis the Desjardins is sort of beast of his own in the province because of its size and so on, a long history and so on. But today, if you do the ratio of the assets of the institution versus the GDP of the province, okay, Desjardins ratio is 66.4%. Alberta is 7.6%. Ontario is 7.9%, but the banks dominate Ontario. BC, it's 27.9%. Okay, so the point is that there is room to grow. Part of the advantage maybe for Desjardins is that the banks, basically based in Ontario and so on, have difficulty for a long time interfacing with French Canadian firms and so on and so forth. So there was a sort of difference. But the other point is that when you look at the cost of borrowing for small firms in Canada from the banks compared to the large firms, and you compare that ratio to what's happening in other countries, small and medium-sized firms in Canada get screwed in having a competitive force in the province pushing on that, and this the Desjardins movement and so on, plus the labor funds and Desjardins are not necessarily correct the old situation, but provide an option that is very important.
And Jack's next question was particularly timely in consideration of the recent Alberta election and the musings of our premier on Alberta pension plan, the role of the CAS in Quebec's financial sector growth.
Well, that role has evolved quite significantly over the years. At the outset, it really was financing Hydro-Quebec and Quebec government and so on. It took some time for it to evolve into equity and so on. And still more time to invest in smaller firms because it's always more costly and so on and so forth. So it has played a role. And the other point very important in the case is that because of the Fonds Solidarité and so on, they cooperate and invest quite often in cooperation so that there's other venture capital or private equity capital in the province that is basically doing a lot of the work, and the case will join with that, so on. So it makes a bigger force. But the other place where the case plays and has played a major role is it basically in providing private equity to Quebec-based firms that were already listed on the exchange. And you see that with WSP and Cogeco and so on, as they were expanding externally to Quebec in the US, and WSP was in Europe and so on and so forth. They would come in with really large size of investments that would allow those firms to take a different dimension, if you want. And in doing that, I think they're playing a role that is not really available. The private equity market in Canada is really for small investments, well, small, 100 million or less, but it won't play in the 500 million and so on. It's always foreign firms coming. The case will play at that level, and that is very important. If you want to grow your economy, you need firms that grow the market, that grow outside the market, and having an instrument like the case that comes and can back that type of investment, I think is very, very important. it has also played a major role in some acquisitions. For instance, when Quebec was trying to buy Videotron, the case aligned with Quebec against Rogers and some others to basically make sure that the deal was with Quebec. It was a financial deal and so on, but I guess the relationships and the mandate, quote unquote, meant that they were playing a major role, and Quebec today is a very significant communications company across Canada. And Cogeco was in the US and WSP is worldwide and so on and so forth. So the role is not really the smaller companies because of its size. It doesn't move the needle. But if you're doing the larger deals where you're supporting let's say medium size or growing companies to really expand, I think you're making a difference.
Thanks, Pierre. And I think that's particularly pertinent to the Alberta example, where our history with knowledge-based businesses particularly is that when they hit that cycle of growth and look to expand, and equity ownership transfers to outside interests that, at a remove, the companies eventually move to where the equity interests come from. Jack's next question was on the importance of human capital in the growth of the financial sector. You've made reference to the leadership role that Laval's program played in drawing in additional insurance work. What do you view as the major elements in building a local labor pool of knowledgeable labor to work in the financial sector space?
Well, I think Laval is a very interesting case because it's specialized, and you can see today, the concentration of insurance companies and so on and so forth. Why would they all be in Quebec City? Come on. Yeah. So there's got to be a reason that is a bit different. The HAC in Montreal is had programs in finance and so on, and to some extent, I think it has fed some of the asset management organizations. There are large ones in Quebec. The Case is one. The PSP is one. Sierra Capital is there. The CN Pension Fund has a great record, and so on. So, to a large extent, the presence of those organizations needs the resources, and to the extent the resources come, then they grow. And the other point, which often happens, is that people go into those firms, learn their trade, and so on and so forth, and then walk out and form their own companies. And that's very important from a economic development and basically regeneration of the sector.
Thank you, Pierre. The fourth question from Jack, or more of a comment, was the rigidity of the Canadian traditional markets in finance on the four pillars, and how Quebec has been successful in breaking down barriers to entry and innovation in the space.
Well, I think historically, when you look at the paper, there was a sentiment in Quebec in many areas that we should, those barriers were not helping in a sense, and that we should expand. At the regulatory point of view, there was a certain amount of hubris people thinking that they were in Washington as opposed to Quebec, and adopting policies that were, probably not always the ones that were in best interest of Quebec. But in essence, the view that came out is that the financial instruments are increasingly in competition with each other, and that to try to separate that by silos and so on is not very useful, and as a matter of fact, counterproductive, and that you need a regulatory framework that ensures a certain neutrality between those different competing products per se, and the ability to make sure that the firms that are dealing with that are not doing stupid things. So that came very early in the process. So you had insurance companies going into basically making corporate loans and so on and so forth. Some of them were before the feds will allow those type of practices. So there, I think it's not something that came, today we do that, tomorrow we do that. It came over time and a certain evolution per se.
Thanks, Pierre. Jack's final point was related to one of his favorite bugaboos, which is the issues that arise when government creates artificial incentives for investment through programs, but acknowledging that Quebec has had elements of success in some of its programs. And as a go-by for Alberta, maybe you can talk about which elements that you perceive have been most advantageous in the incentives that the government's using through its policy tools for investment in Quebec.
Well, there's one point which I sort of agree with Jack, is that would be better for the tax incentive to, in essence, come into effect when there is success, as opposed to at the front end. And in one of the papers I wrote, I said, listen, if you look at the most competitive economies in the world, most innovative, you get Switzerland and Singapore in the top 5 systematically over the years. And those two countries don't have capital gains tax on shares held by individuals. So in essence, you can argue that there should be and so on and so forth, but if you get the benefit if you succeed, if you don't succeed, tough luck. And the interesting point in Canada is that if you win at the lottery, you don't pay taxes. But if you create a firm and make a capital gains tax, they just tax you. So one contributes, you tax them, one doesn't contribute, and you say, be happy. So I think we need to look at that from a certain point. The issue about the QSSP, one of there's 2 or 3 points that need to be taken into account. The first one is that the mood in the province at the time, which is awful. It was sort of the Alberta mood after the NEP. Yeah. So bringing in the QSSP, in essence, change the whole momentum. And to some extent, I don't think a tax saying no gains on capital gains tax and so on and so forth would have had that impact. The second point is that the French Canadian firms were not going public. As a matter of fact, they're not going either today. Okay, that's a problem. the QSSP really changed that. And brought a lot of Quebec-based francophone firms to go public and then to expand and so on and so forth. And that will not have happened, I would say, naturally. And I think we cannot discount the importance that had on the mood and the, basically business people. Emulation is a key for progress and growth by business people. And the QSSP brought that emulation to a large extent. Now, the issue with those types of tax advantages is that they get misuse and so on and so forth, and then you have problems. But clearly, Pushkar was in convenience store business. Yeah, their first issue was 5 million. Okay, today they're worth more than Loblaws.
Pierre, my own personal scholarship recently has been in the space of operating public company decline. How to overcome it, how to drive growth that keeps investment, Canadian companies in Canadian hands, rather than having the ultimate ideal to be to sell to Google or Meta. So what you've been talking about is very dear to my heart, and you can be assured that I will be knocking on your door for collaboration in the weeks and months to come as we keep going down those paths, which are the next items on the agenda for the financial sector partnership. That summarizes Jack's questions.
I'd like to make one comment or one suggestion to Jack, if I may.
Please.
One of the programs that had quite a bit of success in Quebec, and probably not in the sense that you think of it, was the international financial centers. And basically our transactions there and so on. But what it brought to Montreal is huge pools of knowledge and expertise in IT, developments for financial services and so on. For instance, Morgan Stanley's has 2,800 employees in its center, plus about 45% of consultants from CGI or FX Innovation and so on, contributing to that, and they account for about 45%. So about 1,200, 1,300 more employees in their iTech. It's now the third largest center after India and New York for Morgan Stanley. Société SocGen has the same thing, and so on and so forth. So it brought the program and brought a level of expertise that is very important. Part of it stems from the fact that the costs are lower in Montreal than in New York and so on and so forth. So it's not only the program. But the point I was like to make is that one of the feature to get that success was that the mandate to recruit financial institutions to establish an international financial center was given to another organization, to Montreal International, whose mandate was to get this thing rolling. So it was not the government or the regulators doing it. It was really an independent organization, a development organization that was focused on getting that done. And I think if you want to have more success with your captive insurance companies, you probably want to think about who's going to be selling that to the companies worldwide, and with the knowledge as to what does it mean and so on and so forth, plus bringing back the input to government if you need adjustments and so on. But the experience of Montreal International in doing that, I think, tells us that having a specialized agency or organization outside of the government that is really pushing to make it happen has been key here.
Thanks again, Pierre. And that, I think, has tremendous relevance to Alberta, not just in the captive insurance space, but I've always believed that Alberta is, again, Calgary in particular, but even Edmonton, are both ideally located geographically to the West Coast and the fintech developments that are happening on the West Coast. As you mentioned, Montreal has geographic proximity to New York as a lower cost center where people are happy to live because of the quality of life. We offer the exact same benefits to, these companies that are struggling to get and retain workers because of the simple cost of living and sky high housing, that we have that opportunity to provide that geographic nexus for the entire West Coast of the United States, if we can develop those type of initiatives and properly execute them. I have a question for you of my own. I've always sensed that Quebec and Alberta have a special kinship, even though we don't share the same language and we're geographically quite far away. We are probably more aligned than any other two provinces in terms of we have a large number of our populations whose identity is more provincially defined than federally defined. And I think that impacts how we approach growth and regulation interaction with the federal government, and prioritize autonomy and local growth. As we mentioned, we just had elections 2 weeks ago. We have a new finance minister just on the verge of being sworn in, new to the post. And you've described some very attractive outcomes that Quebec has been able to achieve over the past 25, 30 years with coherent and consistent policy in this space. If you were called into the finance minister of Alberta's new office and said, what from the Quebec experience are the things that could be most useful and most quickly adopted by Alberta, what would be those areas that you would highlight?
Well, I don't want to go against Jack, so I guess your captive insurance proposal is key. The one thing I'm not close enough to Alberta to really tell you that, so on, but clearly your credit union organization is not the size and diversification and so on that Desjardins succeed in doing. And basically it raises the question as to, you don't want them to choose to go to be federally regulated. Some of the credit unions have done that. I don't think that's necessarily a good idea if you want to keep having a word and doing that. But the second one is, how do you join with other credit unions, let's say in another province, be it BC or Manitoba, Saskatchewan, or whatever, to get more size, in essence, more resources to put in place the new systems you will have to do, and so on and so forth. And that cannot happen from the minister saying, be nice. It's got to be a consensus within the organization. This is what we want to do. And the minister saying, okay, what do you need to get it done fast? And to some extent, that's what the private bill legislation in Quebec has done. The leaders of the firm come in and say, this is what we want to do, and we want to expand, and this is what we need. And within 3 months, you've got legislation that gives you the path ahead to move. And to some extent, I think that's one of the things that I would worry about and see, okay, given the institutions we have, how can we bring them to expand and grow and so on? And if there are limits, how do we unshackle them, move forward?
Thank you, Pierre. Jack, do you have any more thoughts listening to Pierre's responses?
No, I think we should let other people get a chance to ask questions.
Nothing in the Q&A box at the moment, but does anybody out there have questions that they'd like to address to Pierre? No. First question, Pierre, what do we know about why LSVCCs in Quebec perform so much better than those in other jurisdictions?
I think to some extent, the regulations or governance were a bit different. I recall the being in essence on the board of what was it called, employee something, but basically it was the construction or trade unions that were there. The old board was the heads of those unions. So you had the management, but basically the people deciding were all the heads of the different trade unions. And so they weren't, good people. I think they were trying to do their best and so on. But if you're a pipe fitter, doesn't mean to say you're the best investor. And to some extent, they had, basically they didn't have the returns that you were looking for and so on and so forth. The second point, which is probably more soft than anything, there were real support in Quebec City at the government level in finance and so on, vis-a-vis those organizations, and particularly the Fonds Solidarité, and to help them succeed and push in the right direction and so on and so forth. So the environment or the relationship between the management of those funds and finance, for instance, or the IMF was, I think, much closely and more constructive, if you want, than what existed in other provinces. And to some extent, it was nurturing, if you want, the growth of those organizations in the right direction.
Excellent. I think we have time for one more question. If somebody would like to pose a final question, have the last word.
The other point, if I may.
Yes, please.
The law gave the AMF the responsibility to audit those funds every year. Okay, so it was not only, this is the rules and you follow them. There were systematic audits from the regulator to make sure that things were in place. And I'm not sure what was happening in other provinces, but that brought again a sort of knowledge base on both sides, which is key.
Thank you. Well, I don't see any further questions popping up. We are near the end of our allotted time. Pierre, as Jack has mentioned, I want to thank you not just for your efforts on this paper, but on your long-term support of the School of Public Policy and your contributions to the knowledge base in the province of Alberta and beyond. It is tremendously appreciated. And it is not every day that we have a chance to engage with people with your experience and breadth of knowledge in this space. So on behalf again of the school, we thank you. Jack, I thank you for serving as the discussant and all your contributions. We will end the seminar today. And I thank all of you for coming out and remind you to keep your eye out for upcoming additional webinars in the Financial Sector Partnership Series. Thank you and goodbye.